I'm here again. My name is Clara Msiza, your lecturer, and I'm not alone. My colleague, Mr. Mhokoni, is here as well. I'm not sure about Mr. Marisa if he's here today, but we are here for you. We understand it. Studying is not easy, especially when most of you are studying, working, doing accounting for the first time. Families, commitment, life in J. We know it's hectic, so we're gonna try our best to make this semester the best semester ever for accounting 1502. However, it's up to you. We will do our best, but we need your A game, guys. We need to hear. We need you to make sure that if you don't understand, send the emails, come to the class, put questions on these charts. You know, even after the class, if you don't understand something studying, put it there. Let us see. If I'm not there, we've got fellow students that are, you know, they know this accounting, can respond immediately. So now I'm gonna start taking hands. I see we have Kim. Kim, you can unmute. What's your question? Okay, Komuto.
Yes, ma'am. Can you hear me, ma'am?
Yes, I can hear you.
Greetings, ma'am. I have a question regarding a transaction that I saw. So this transaction, I forgot what it says. Let me just grab it. But it speaks about like the business made a deposit to the municipality. So I wanted to know, since it's a deposit, it's receivable, right?
Yes. And
Is
then
it
remember,
gonna be
first of all, you
invested?
need.
Sorry?
Yes, first of all, ask yourself. Sorry, can you hear me? Ask yourself
Yes,
two
okay.
things. Is this a supplier or is this a customer making the deposit? Remember, when it's a supplier, what comes into your mind is trade payables. When it's a customer or a client, what comes up to you first is the debtor, who is it? Trade receivables. Am I clear?
Ma'am, I'm just looking for the questions. Sorry.
Okay,
But
no
it's fine. I
problem.
think you can
As soon
go on
as we
to the
get,
next person because I can't find it
yes,
now.
you can
So
also
I think you
post it
can
on
go.
the chat for everyone.
Yes,
Okay,
ma'am.
the next one is Abiwe. Abiwe, you can unmute yourself. Okay, can we have, is it Safia?
Hi, good evening. How are you?
I'm good, thanks, and yourself?
I'm all right, thank you. I just have two questions regarding study unit 4. Actually, the one question regarding study unit 4, the exercises that are on revision exercises 4 and 5. Will we be getting solutions to that? Because they say,
Okay,
will
let
it be,
me,
yeah.
yeah,
That's the one
let me
question. And
just,
the second question, sorry to interrupt,
yes.
it's just that the online tutors, there are two questions where they said we can discuss it with the e-tutors. Have those been assigned yet? Those are my two questions.
Okay, I wanted to go to the study unit for you to show you. I think we had most of them, we had the solutions, but we will check and share with you those solutions. And the e-tutors, we're still waiting for management to allocate the e-tutors. I know the contracts are there, but they have promised us maybe sometimes next week. But however, let this not deter you. You can do those exercises, and if you are struggling, you can reach out to us. You can post it on the chats. The chats for last week, study unit 1 and 4, and we will help you. Happy?
Thank you very much.
Yeah, I can. Tulile, can you guys please mute your mics? Can you mute before I mute everyone? Okay, Tulile. Okay, Tulile is still struggling. Ntalala. Sorry if I pronounced it wrong.
Hello.
Hi, Mr. Jonas.
Hello, can you hear me?
Oh yes, I can hear you.
So
Kalala.
my question is regarding the last online class.
Sorry. Kalala, can I mute everyone and you will unmute yourself? Okay, Kalala, you can unmute yourself. I was trying
Can
to
you hear
mute
me?
someone here. Yes.
So my question is regarding the online class that was held last week, I think on Saturday.
Yes.
And when I wasn't able to attend the class, when I tried to access the recording, it's not audible. And I tried sending an email, but they sent me the same link back. So
yeah. Okay, Ntalala, I know the recording started, I think, 2 hours before the class. So if you can fast forward, there is an audio. I think I've been responding to students on the chats for study unit 124 and also the orientation explaining that you need to fast forward the recording for you to get where the class started. So what happens is that we automatically record the sessions. You know, when we set the meeting, it's automatic. So immediately when the first person joins the meeting, it starts recording. We are doing that so that we don't get into ourselves forgetting to record or any other technical issues that we might get. Hence, we set it like that. So you just have to fast forward at least until 2 hours, then you will start hearing voices.
okay, no problem. Thank you.
Okay, Ndobego, quickly. We have few minutes left before.
Okay, good evening, ma'am.
Hi. I know that
Good evening.
we've all got questions. We've all got questions, but we do need to start with the module because our time is very limited.
Sorry. I am the lecturer here. I don't know who's speaking. So if you just joined, I've given everyone, I told everyone that we won't get to everyone, but we have 15 minutes to questions and answers, as I promised last week, to say I will allow you guys to ask questions so that we don't want to leave anyone behind. Sorry, ma'am. Okay, Mr. Jonasi, was it Mr. Jonasi?
Yes, ma'am. Good evening, ma'am. I'm gonna just talk to what we experienced. I think it was earlier during the week when we had classes. I want to take that by having this class during this time, it's resolving the issue of clashing because we are also having other modules, especially CLO, that clashed with this class yesterday, if not the day before yesterday. Has that been resolved?
Remember the class that was on the 5th of March, that was an e-tutor class. So they've got their own schedule that they have been provided with. So hence, we're also trying to add on the classes and having them in different dates so that we can try to accommodate students, you know. So unfortunately, sometimes the clashes will happen because UNISA is a big institution. Things happen, but however, we'll try to make the recordings available.
No, I'm referring to times, not the days, ma'am, the times.
Oh, so you prefer this time, half past?
Not that I prefer, but what I'm trying to ask is that by having this class this time compared than on the 5th, because it was clashing with CLO, is it by having this class this time, is it resolving the issue we've complained about?
I don't think so, because so far I can discuss with Mrs. Aziza, because what is happening that the schedule is like every Thursday, same time. So I'm not sure if that will really be solved, but send me an email so that send an email so that I can discuss with her and check with them if we can move the class to another time. But however, remember, it's a big institution and yeah, things are not easy. So remember, Aziza is a tutor. We are lecturers.
Oh, because I mean, it was Mr. Sorry for back and forth, ma'am. I mean, we've raised this with Mr. Mohokoni on the 5th, and then he promised that he's going to speak to you. So I'm surprised now that you don't, you didn't get that.
No.
That we've got.
Remember, there's a difference. Mr. Mohokoni and myself, we are the lecturers. So we have more control on our time slot, not the e-tutors one. So we need to engage with the e-tutors again to try get their timetable maybe reshuffled a bit. So send us an email, then we will follow up and give you feedback. So we'll give you feedback via the chat announcement, all the platforms that I'm there. I will give feedback on Monday. Thank you. We have 4 minutes. Who am I taking the 4 minutes? I think is it Bongani? Quick question.
Thank you so much, ma'am. I just want to check if my understanding is correct here. Let's say if I'm using my credit card to pay a supplier, does that only affect liabilities when it comes to statement of position, whereby the trade payables it's a negative because I'm paying my debt to the creditor, and then credit card is a positive? And I'm confused when it gets to T account. Will I open 2 accounts, trade payables, whereby I'm reducing, on the debit side because a trade payable reduce on the negative side? Must I then open credit card to be on a positive side? If I can get that confirmation, ma'am, because I'm not sure if I can open a credit card or not.
Okay. Mr. Mkhokwane, do you want to take that, or Mr. Pumolo? Joseph Pumolo?
I think, Clara, I didn't get the question clearly.
Okay,
So
the
maybe-
student is asking that if they make use of their credit card to pay an expense. So when coming to the T accounts, must he open the T account for a credit card and also do the trade payables? Remember, the trade payables are going to reduce on a debit side. So he wants to know that the credit card, will it be bank? Because now he's gonna have a negative balance in the bank account because he's using a credit card.
A simple answer, bank account.
Yes. Are you fine, Bongani?
No,
But if you still need help,
I'm not
then
100%
engage
fine
with us.
because yeah, I
Okay.
think I will type a question because on study unit 4, the what you call the last revision, there is where it says Mr. So and so is paying the creditor by a credit card. But when I'm looking at the liability, it's a negative 2,000 and a positive 2,000. So it didn't touch the bank, on the asset side. That is why I was asking, because when I was doing that manually, I also put it on the bank, not on the what you call on the liabilities. But when I'm checking on the solution, both amounts are on the trade payables with the negative and the positive, not on the bank. So that is why I was asking that.
Okay. Can you just post it on the chat so that I don't take up time? Then we will answer
Thanks,
you
I
on
will
the chat.
do that. I will do
Just
that.
write
Thanks.
the exercise while our colleague is presenting. We will make sure
No
that
problem.
we respond to you. But I think there's nothing wrong on that. We'll explain what happened. Because some examples, they will use, when is a bank credit, they will use different signs, but we will explain it. So we are out of time. I will give you again, guys, an opportunity maybe after 30 minutes to, for a break for question and answers. But if you think you're gonna forget your question or anything, kindly put it on the chat. And then if we feel that we need to respond to discuss it again, I will allow after 30 minutes, and also before the end of the class for you guys to ask questions. So now I will mute and all the mics to avoid any disturbance. as I allow our colleague, Mr. Hokone, to start with study unit 5. All the best and thank you, Mr. Hokone. The floor is yours. Mr. Mkhokone, are you here?
Is Mr. Mokoponi muted, perhaps?
Sorry, I'm just checking him. Let me just mute the mic.
Yeah, now I'm okay. Let me start. I'm saying, let me put this thing out. Good evening, everyone. Welcome to this is our third class before assessment 1, which is opening next week on Monday which is opening next Tuesday, 12 March at 8 a.m. and closing on the 19th of March at 11 p.m. Guys, remember, before you access our assessment 1, you must first do our admin self-assessment. Is there on my UNISA. When you go to my UNISA on the left-hand side of your screen, on the module side, please do admin self-assessment, because assessment 1 is not going to be available for you if you are not yet submitted as admin self-assessment.
So I couldn't find that. I was looking for that for a while. Did other people find that self-assessment? Because I looked
yes,
at it.
if you log into my UNISA on the module side, on the left-hand side of your screen, if you go down, you pass assessment 1, assessment 2, those folders. After assessment information folder, you'll see it. It's written admin self-assessment.
Mr. Mkhokone, can we just quickly share just to for a quick one? I don't know. I'm on my UNISA. Let me share and
let me stop sharing.
Share. Yeah, so that this. Can everyone see my screen?
Yes.
Yes. So the admin self-assessment is located just under the assessments. Can you see my screen? Is that just show with the reaction because I've disabled the mics? Then it's here, just immediately after how to calculate the final mark. Then that's where you get your admin self-assessment to unlock your assessment 1. Hope this works. Thank you. I'll stop sharing.
Let me share.
Yes, we can see. Thank you.
Today we are going to discuss study unit 5, the last study unit before we open the assessment next week, Tuesday. As Clara introduced me, my name is Mr. Mutlatlana Mohokoni. I'm one of the lecturers for FAC1502. Let's move to the next slide. Today we are going to discuss processing accounting data. The purpose of this lecture today is to understand books of first entry, subsidiary journals that are used to record different types of transaction. Remember, we have 2 cash journals, which is cash receipts journal and cash payments, and also credit journals, which are sales journal, sales returns journal, purchases journals, and purchases returns journals. And also we are going to look at the important concepts Also, we are going to look at value-added tax VAT. And the last one will do class exercise. Then here there are two types of journals, which are cash journals. This is cash receipts journals, where we record all individual cash received by the business. We are going to record them under cash receipts journals. And under cash payments journal, we are going to record all cash payment made by the business. Money going out of the business, we are going to record them under cash payments journals. While money received or cash received by the business are recorded under cash receipts journal. Let's move. Here there are types of credit journals. Before types of credit journals, I want to emphasize two inventory systems, which are periodic and perpetual inventory system. But on this Study Unit 5, we are going to deal only with periodic inventory system. But I want to show you the difference. What's the difference between periodic inventory system and perpetual inventory system? The difference is that under periodic inventory system, inventory purchased are recorded in the purchases account when the business or the entity are using periodic inventory system. When the business are using perpetual inventory system, inventory purchased are recorded in the inventory accounts. That's the difference. Periodic inventory system, inventory purchased are recorded under purchases account, while perpetual inventory system, inventory purchased are recorded under inventory account. Then the next one, at this stage, just know the merchandise purchased on credit is debited to the purchases account because we are using periodic inventory system. Is that why I said inventory purchased under periodic inventory system will be recorded under purchases account. Here there are four types of credit journals. The first one is purchases journals, where we record all trading inventory or merchandise purchased on credit by the entity is going to be recorded in the purchases journals. Only in the purchases journals, we record only trading inventory purchased on credit. If we purchased, for example, equipment on credit, that one, we are not going to record it under purchases journal. We'll record it under general journal. Remember, under purchases journal, we record only inventory or merchandise purchased on credit. And the next one is purchases returns journals. It says all trading inventory or merchandise returned to the seller by the entity is recorded in the purchases returns journal of the entity. Here we are saying we record only trading inventory returned by the seller is recorded in the purchases returns journal. Let's move. Then the next two credit journals are sales journals and sales returns journals. Under sales journals, we record all trading inventory or merchandise sold on credit. Inventory or merchandise sold on credit are recorded under sales journals. And the next one is sales returns journals, where we record all merchandise that was sold on credit and returned by the debtors or trade receivables. Then we'll record them in the sales returns journals. Trading inventory or merchandise returned by the client or customers will be recorded in the sales returns journals. The next one is general journal, where we are saying all transactions that cannot be entered in one of the journals that we have discussed above are entered in the general journal. All transactions that cannot be entered in the cash receipts journal cash payments journals, sales journals, sales returns journal, purchases journals, purchases returns journals are recorded in the general journal. For example, credit losses, interest on debtors accounts, errors that are corrected, and year-end of adjustment, which will be topic. Year-end of adjustment will be Study Unit 6. Those ones are recorded under general journals. Here there is NB. Purchases and sales of goods other than merchandise are recorded in the general journal for the purpose of this module. That's why I said purchases of inventory are recorded in the purchases journals. And sold of inventory on credit are recorded in the sales journals. Other than that, purchase and sales of other goods, other than inventory or merchandise, are recorded in the general journal for the purpose of this module. Let me move on. Here is just the important concepts before doing classes. The first one is debtors. Debtors, we are saying, are customers who owes entity money as a result of credit sales made to them. Debtors are clients who owes money to the business because the business sold to them on credit, or the business or the entity rendered a service to them on credit, and they have not paid the entity yet. They are classified as debtors. And the next one are creditors. Here we are saying creditors are suppliers who have sold goods or rendered service to the entity on credit. Suppliers are people or customer or suppliers whom the business purchased goods from them on credit, or they rendered service to the business on credit and the business have not paid them yet. Those are creditors. Remember, creditor is a liability, and liability is amount owing that will be settled by the business or paid by the business or the entity at a later date. The next one, we are saying settlement discount granted. Here we are saying it refers to settlement discounts offered to debtors in order to encourage early settlement of debts. Settlement discount granted refers to the settlement discounts offered to debtors in order to encourage early settlement of their debts. And the next one is settlement discount received. Here refers to the settlement discounts offered by creditors in order to encourage settlement of the entity outstanding accounts. Here the suppliers are giving the entity discount to encourage the entity to settle their debt as quick as possible. Here the next one is value added tax. Here, what is VAT? That one is not on the slide. VAT is the tax added to the cost of a product or service and is levied for the purpose of generating revenue for the government. I'm saying VAT is the tax added to the cost of a product or services and is levied for the purpose of generating revenue for the government. And who is a VAT vendor? VAT vendor is someone who is registered for VAT. Because on the first one, we are saying VAT can only be charged by persons who, in terms of the Value Added Tax Act, are registered as VAT vendors. And I'm saying VAT vendors is someone who is registered for VAT. The next one says current VAT rate is 15% in South Africa. And the next one we are talking about output VAT. We said is the tax levied by the entity on sales of goods or services rendered by the business. Here on the VAT output, you can say is VAT collected on behalf of SARS by the entity. That is our VAT input. Our VAT output is VAT collected on behalf of SARS by the entity. Then it will be classified as a liability for the business. The next one is VAT input. Here we are saying is the tax paid or payable on goods delivered or service rendered to the entity. On the VAT input, you can say is VAT paid on the purchases of goods or services rendered and will be claimed by the business from SARS. Is our VAT input is VAT paid on the purchases of goods or rendering of services and will be claimed back from SARS by our entity if our entity is a registered VAT vendor. Here we are saying deductions for input tax will only be allowed if a proper tax invoice is received and kept. You are only allowed to claim VAT input if a proper tax invoice is received and kept. Here we are saying the next one, we are saying if VAT output is more than input VAT, the difference is payable to SARS. If VAT output is greater than VAT input, the difference is payable to SARS as VAT payable. And the next one, we are saying if output VAT is less than input VAT, the difference is refundable to the entity by SARS. Let's move to the next slide. The next slide, we are talking about amount. Here we are saying if the amount is VAT inclusive, it means the VAT of 15% is already included in the amount. If you are saying VAT inclusive, we are saying that amount already including VAT. Therefore, the following calculation will be performed in order to determine VAT. If the transaction may be saying amount include VAT of 15%. When you calculate VAT amount, you will say amount including VAT times 15 divided by 115. When you are calculating VAT on the amount including VAT, you will say amount including VAT times 15 divided by 115. And the next one, we are saying if the amount is excluding of VAT, it means that the VAT of 15% is not included in the amount. Therefore, the following calculation will be performed in order to determine VAT. You'll take the VAT amount, multiply by 15% divided by 100. If you are given in the question amount excluding VAT, to calculate VAT amount, you take amount excluding VAT times 15 divided by 100. And if you are given amount inclusive of VAT, you will take that amount including VAT times 15 divided by 115 to arrive at the VAT amount. Here is types of taxable suppliers. Here there are 3 standard rate, zero rated and exempt suppliers. Taxable suppliers means are suppliers which VAT can be levied based on VAT legislation. Here we are saying standard rate. What is the difference between standard rate and zero rated suppliers? There is no difference because standard rate and zero rated suppliers are both taxable suppliers. But the only difference is standard rate is taxed at 15%, while zero rated is taxed at 0%. Then I gave you examples of zero rated, which you can refer to page 34 of Study Unit 5. Here I gave you few examples. Milk. When you go to the shop, you buy milk. When you check on receipt, you'll see there is no VAT on milk. Eggs, brown bread, maize meal, meal rice, etc. You can go to page 34 of Study Unit 5 for more examples. The next one is exempt suppliers. Exempt suppliers is exclusion from the VAT Act, which means VAT cannot be levied on exempt suppliers. Here I gave example of financial services, interest received, interest paid, educational services. For more examples, you can go to page 34 of Study Unit 5. Before I can go on with the question, can we, with the revision exercise, can we allow questions for 15 minutes before we go to do class exercise? Can we allow questions for 15 minutes for the slides? Any questions on the slides? Clara?
Yes, I'm here. I've enabled the mics, and if your question is not related to the presentation, can you please lower your hands, because I see some old hands, so that I can be able to recognize the relevant people. So Trudy Ntabiseng. Okay, Jessica, you can raise your question.
Thank you, Ms. Clara. Sir, you told us that the output VAT is a liability. Does that mean that input VAT is an asset?
Yes, input VAT is an asset to the business, because remember, business claim input VAT from SARS. That's why it's an asset to the business. And VAT output is a liability, because the business collected VAT on behalf of SARS. That's why it's a liability to the business.
Yes. Okay. So would we post, sorry, just along with that, would we then post a VAT to be charged as an asset, and where else would we post that?
You mean on the VAT general ledger account?
Yes, yes.
Remember, VAT input, you open it with the debit balance because it's an asset. And VAT output, which is a liability, you open it with the credit balance. And the difference between those VAT input and VAT output, it will depend which one is great. It's either VAT refundable or VAT payable.
Okay. Thank you, sir. Thanks, Ms. Clara.
You're welcome. And I think it's Lise Delport.
Hello.
Yes, we can.
Can you hear me?
Yes, I hear you.
Yes, we can hear you very clear.
Okay, so this is not about the VAT, it's about the periodic system, right? The e-tutor activity. I know that now that when we purchase merchandise, it's put into the purchases general ledger.
Yes.
But when in the activity, there's a inventory general ledger as well. Now, I wondered if maybe you could explain to me how you will then calculate the inventory by using your purchases journal.
By using what the purchases journal?
Yes.
Can I take it?
Yeah, you can take it, Mr. Marisa. Yeah, you can take it.
Okay. Like you explained that we have two different inventory systems, ne?
Yes, sir.
So in the inventory account, I will refer you back to the accounting equation. Inventory account is an asset account.
Yes, sir.
Purchases account it's is it a liability? I think it's a
Expense account.
liability. Eh?
Expense
It's an
account.
it's an expense account. So
Yes.
there are
Yes.
two different inventory systems. So if you are using the periodic, then you are using purchases as an expense account, meaning when you purchase inventory, then you'll debit the purchase account, which is an expense.
Yes, sir.
But if you are using the perpetual,
Yes, sir.
inventory account is an asset. So that's how we differentiate the two.
Yes, sir.
Joseph, can you carry over then?
Are you answered, ma'am?
I'm just struggling because like it says in the eTutor activity that we are using the periodic system. So I don't understand why there would be an inventory general ledger.
There won't be.
Okay, so all right.
There will not be an inventory account if you are using.
Okay.
Oh, okay. No. Joseph, remind me there. There will be an inventory account, but at the end of the financial period.
Okay, yes, sir. So how will that work then? If the question is taking too long, I'll just send you an email with the detail.
No. We'll respond to that.
Okay, it's fine. Thank you.
Okay. All right. Thank you.
And
Joseph,
so we
carry
have
on.
Komodo, do you have a question? Mashitwa.
No, it's fine. My question has been answered. It was regarding the general ledger. So in the general ledger, we record transactions that cannot be entered in the other subsidiary journals, right?
Yes, in the general ledger. Yeah.
Yes.
Okay. And also, I think I have a question on what she just, the previous lady, she spoke about like the periodic inventory system and the perpetual inventory system. So I wanted to ask, will they tell us that it's a perpetual inventory system or whatever? Like, do they tell us? Or
yeah, the question will tell you whether the entity is using periodic inventory system or perpetual. But for this assessment, the next coming assessment is only periodic inventory system. For the purpose of the next assessment, which is assessment 1, it will be only periodic inventory system, no perpetual inventory system.
Okay, so when you refer to purchase account, you refer to like, is it an expense? Like when you say purchases account.
That's why for periodic inventory system, for example, when the business purchased inventory, they will record the purchases of inventory in the purchases account. But with perpetual inventory system, purchases of inventory will be recorded in the inventory account. That's the two different. But for now, stick to the periodic inventory system.
Can you just repeat that one last time, please?
I'm saying the difference between periodic inventory system and perpetual inventory system. Let's give example with periodic inventory system. Maybe, for example, under periodic inventory system, the entity or the business purchased inventory for cash. The purchases of inventory for cash will be recorded under purchases account, while under perpetual inventory system, the purchases of inventory for cash will be recorded under inventory account. Are you answered?
I'm answered. So just to clarify again, the periodic inventory system, the example that you just made, you said that if the entity purchases the inventory for cash, it will be under the purchase account.
Yeah, if it's periodic inventory system, but if it's perpetual inventory system, the purchases of inventory for cash will be recorded under inventory account. Good, the
Got it.
difference is, yeah, that's the difference.
Oh, got it. Thank you so much.
Okay, can we just take the last two? And I also know to the students that are confused, we will try also after the exercise to do question as soon as he has done one question for questions and answers. Can I take at least two, Sihlangu and Lundi, then the rest you can post so that Mr.
I was
Mokokone
next
can
in line.
continue.
Hello, I
Oh,
was the next line.
Mashika, yes, you can.
Yes, I wanted to ask the in connection with the inclusive VED, why do we use 15% by 115? Because I've never heard about this formula before, even on the taxation module.
Which one? You mean the amount exclusive of VAT?
So the inclusive.
Inclusive.
I think
Remember,
yeah.
VAT is 15%, and amount excluding VAT is 100%. And when you add VAT, it will be, you will say 100 amount exclusive of VAT plus VAT of 15%, then it will be, the total will be 115. Then when you are given amount inclusive of VAT and you want to calculate the VAT amount, you will take that amount including VAT times 15%, which is VAT rate, divided by 115, which is the amount inclusive of VAT.
Can I add on that, Joseph?
You can add, Marie. You can go on, Marison.
I was just saying, like you explained, 100% is of the items, né? Then if you add 15%, it will be 115%.
Okay. Okay.
Are you getting it? So it's an amount plus the 15%. So it's 115.
Okay. Thank you
You
so
get it?
much.
All right.
Yes.
Thank you.
Thank you.
Can we take Sihlangu and we can then Mr. Kokone can continue, then we'll make time.
And Metlara, if you can allow me to add on.
Yes.
The VAT in means is the amount coming in. That's the VAT input. And the VAT out is the amount that we owe SARS. So the two, VAT in will be an asset and the VAT out will be a liability. What we owe. Thank you.
Okay, can I take the last one, Sihlangu?
Hi, ma'am. Actually, answered one of the learners previous one was asking about the calculations with regards to the VAT, but I'm sorry.
Okay. Thank you. So I'm gonna mute everyone, and we will, myself and Ms. Marisan will also be checking the chats to try to respond. But however, let's allow Mr. Joseph, please concentrate so that you are not left behind by looking at the chats too much, so that you might get confused. We'll allow time for questions and answers.
Yeah, let's continue. Now we'll do class exercise, which is revision exercise 5.11. Here they are saying the following information relates to Sunshine Plus Traders. This is the name of our business or entity who is registered as a VAT vendor. That means all the amount in the transactions are inclusive of VAT. If they are saying the business is registered as a VAT vendor, when you go to the transaction, you must remember that all the transactions are including VAT. The periodic inventory system and control accounts are in use. The VAT period of the business ends on equal month. Then you are given trial balance as at 31st of January 20.4. You are given the folio, the debit and the credit. They gave you the land and building at cost. They gave you furniture is there, trade receivable control account, drawings, there is VAT input, VAT output, sales, purchases, rental income, telephone expenses, wages, stationery, etc. Let's move to the next page. The next page is our required. Here they are saying required number 1, they are saying record the above transactions in the following subsidiary journals properly totaled of Sunshine Class Traders for February 20.4. Here the first one is A, which they are saying cash receipts journal. They are saying analysis of, they are saying they need analysis columns for bank, sales, VAT output, trade receivable control, VAT input, debit, settlement, discount granted, and sundries. Remember, under cash receipts journal, we said we record all cash coming into the business. Then the next one, the required B, they are saying cash payments journal, they said they want columns for bank, purchases, trade payables control, settlement, discount received, wages, VAT input, VAT output, they put credit in brackets and sundries. And remember, under cash payments journal, we record all cash paid out by the business. We record all cash coming out of the business under cash payments journal. Required C says sales journals, and they are saying they need columns for VAT output, sales and trade receivable control account. And remember, under this sales journals, we record all trading inventory sold by the entity on credit. Under sales journal, we record all trading inventory sold by the entity or by the business on credit. Required number D, they want you to do purchases journals, and they are saying they want columns for VAT input, purchases and trade payables control. And remember, under purchases journal, we record all trading inventory purchased on credit by the entity. Under purchases journal, we record all trading inventory purchased by the entity on credit. Only trading inventory purchased on credit will be recorded under purchases journal. Anything purchased on credit other than inventory or merchandise will be recorded under general journal. Required number E, they are saying they want us to do sales returns journals, and they want columns for VAT output, sales returns, and trade receivable control account. And remember, under sales returns journals, we record only transactions for trading inventory returned by the customers to the business who purchase those goods or trading inventory on credit, because those guys, they are not happy with the goods they purchased from us on credit, and they return those goods to the entity. Then we record those goods under purchases returns journal. The last one is general journal, where anything not recorded above, not recorded in the cash receipts, cash payments, purchases journal, sales journal, purchases returns journals, and sales returns journals will be recorded under general journal. Here, let's do this transaction. Now we are on transaction for February 20.4. Transaction number 1, day 1, Feb 1. They are saying the owner, S. Shine, made a direct payment into the bank account of the business to increase his capital contribution. The owner made a direct payment into the bank account of the business to increase his capital contribution. Remember last time it was on Saturday when we did class on basic accounting equation. Here we said the owner contributed his capital contribution to the bank. Remember, when the owner contributed capital to the bank, to the business, that means our business bank account will increase by the amount, by the contributions received from the owner. And while our capital account, which is an equity account, will also increase by 15,000 contributed by the owner. But today, because we are doing journals, this one will affect our cash receipts journal because we received cash from the owner of 15,000. That's why this one will affect our cash receipts journals. Let me go to the solution and show you transaction number 1. You will see on the first, under details, we put S. Shine. Remember the date. This date, let me explain the columns. Under this date, we record the date the transaction took place. The transaction took place on the 1st. That's why we put 1 because it's February 1. Under details, we record the name of the person or business from whom the cash was received. Under details, we record the name of the person or business from whom the cash was received. Here we received the cash from the owner. We received 15,000 from the owner. That's why under our details we put S. Shine, the name of the owner, the name of the person from whom the business received cash. That's why we put his name under details. Then under bank, we put the under bank column. Remember, under bank column, we put the full amount. Under bank column, we put amount inclusive of VAT under bank column. And there is sales here. There is none. Under sales, there is nothing. There is no VAT output, no trade receivable. And because there is no column for capital, then we go to sundry accounts. Then we record the amount of 15,000 and the amount, and the details will be capital. Let's move back to the next transaction. The next transaction is still on the 1st. We made an EFT to the City Council for water and electricity for 3,105. Here, the business paid for water and electricity. That means money goes out of the business. That's why this one will form part of our cash payments journal, because we said under cash payments journal, we record all cash paid out by the business under cash payments journal. We record all cash paid out by the business. Money coming, cash coming out of the business. Here, 3,105 comes out of the business because we paid City Council for water and electricity. If we go to the solution, this one will affect our cash payments journal because money goes out of the business. Because we said under cash payments journal, we record all cash paid out by the business. If we go to suggested solution, you can correct here it will be cash payments journal, not cash what. It will be, it's just typing error. It will be cash payments journal. Then on the date, we record one is day 1 of February. Under details, because I said under details, we record the name of the person or business from whom the cash was received. Here the cash from whom the cash was paid, because this is cash payments journal. We record the name of the person or the business from whom the cash was paid. Here we paid city council. That's why under details you see the name of city councils. City council. Then under the bank we record the full amount of 3105. Then we go to VAT, because I said VAT input. If you remember, I said VAT input is VAT paid on the purchases of goods or services and will be claimed back from SARS. Then we calculated VAT output. We say 3105 times 15 divided by 115. Then you will arrive at the figure of 405. You take 3105 because they said this is a VAT registered vendor. Then I told you, if this is a VAT registered vendor, all the transactions amount included VAT. That's why we used 15 over 115, because this 3105 is including of VAT. That's why we said 3105 times 15 divided by 115. Then you arrive at the figure of VAT input. And if you look at the columns, we don't have columns for water and electricity. That's why we put the amount under sundry columns. Then on the under sundry accounts, under amount, we put the difference between 3105 and we minus VAT of 405. We'll put the difference of 2,700, and the details will be water and electricity. Let's move to transaction. The next one is transaction on the 3rd. Here we said purchased merchandise from Glasgow Ltd. and
Sorry,
paid.
Mr. Pokone.
Hello?
Mr. Pokone?
Yes.
Yeah, I've got students who raised their hands. I think they are a bit confused. Can you allow just
give them,
two
allow them
questions so
to,
that
yes, you can allow them to ask
yeah,
questions.
just the two, so that we don't leave everyone behind, because the students are complaining that they are doing accounting for the first time. So please,
give
those who
them a
understand,
chance to
please
ask.
bear with our fellow students. We don't want to leave them behind the semester. Thank you. I'm taking 3 hands. Let me take Tato quickly, please. Tato, okay, well, Tato is still trying to unmute. Can we do Lebohang? Lebohang? Okay, Liz. Okay, Lebohang is here. Lebohang, quickly.
Good evening, everyone. I am also doing accounting for the first time. I'm having difficulty to understand an already calculated journal. You know, when you are doing the calculations along with the lecturer, you see how he has placed every transaction. But then when yet you are doing it yourself on a spreadsheet, you kind of have difficulties because you are not familiar into where do those transactions go to. Is either debit or credit, unless if we do a clean journal where we input those transactions one by one, filling them according to how they are transacted each and every day as you are explaining, then we will be able to do it ourselves on a clean spreadsheet. Because now we are looking at a complete journal where you have all the things right there. So in my mind, I'm copying and pasting. I don't know if I make sense.
Yes, you are
Thank you,
making
Lebogang.
sense.
Thank you,
Yes,
Lebogang. You're making sense. We'll consider what you have just said. However, the reason why we are doing like this is that we're expecting you to have first went through study unit 5 and attempted the question yourself first, so that when we meet here, at least you are not seeing this for the first time. So we have shared before to say we're going to do this study unit. Please come with the questions. But in the future, we will try to see how we can make it a bit slower and more practical. Next question, Lebogang. Lebogang is done. Liz, report on Liz.
Yes, ma'am. I just want to make sure about something. When it comes to capital and loans, do we put VAT on it? Like, is it VAT inclusive? Do we calculate VAT on capital and loans?
There is no VAT on capital and loans.
Okay, thank you, sir.
Yeah. Yes, because okay, I'm fine. Okay, thank you. Lungi. Lungi. Lebogang.
Hello, everyone. I'm doing accounting for the first time, so I'm quite nervous doing this module. But the thing that I'm confused about is that, or rather the question that I want to ask is that, let's say it's Sunlight Business. If Sunlight Business makes a purchase, is it going to be two different journals when they are doing those transactions? Because I've noticed with this one, when the owner deposited money into his business, it was a different column. I don't know. I don't know how to call it. And then when he paid the municipality, it was a different, totally different. It was a CPJ. So I want to understand: is it with a business? Is it two separate sheets every time?
Yeah, remember, in the cash receipts journals, the entity or the business record all cash received. And under cash payments journals, the entity record all cash paid. Money goes out of the business. Cash goes out of the business will be recorded under cash payments journals, while cash received by the business will be recorded under cash receipts journals. Because here you see on Feb 1, they made an EFT. They paid water and electricity. That's why we recorded this transaction under cash payments journal. And the first one, the owner contributed capital to the business. That's why we recorded the first transaction under cash receipts journals, because now the business bank account increases by 15,000, while the second one, the business bank account reduces by 3,105, because the money goes out of, if the money goes out of the business, we record under cash payments journals. If the money coming into the business, we record under cash receipts journal. Are you answered?
Yes, I am answered. Thank you very much, sir. Thank you.
Can I
Hello.
Yes.
Can
sir.
I?
Yes, you can add, Mr. Maraisan.
I think what we need to know, actually, in accounting, there are two legs to a transaction. So if you are debiting another account, you have to credit another account. I think let me leave it there. There are two legs to a transaction: a debit and a credit to a T account. Thank you.
When you are doing basic accounting equation, The other transaction, the other accounts must be debited and the other one must be credited according to double entry system. Like the first one, if you see the first one of 15,000, you know you debit your bank account by 15,000 and you credit your capital account by 15,000.
Thank you. I think I will take last one and we will continue. Then we will also pause again for you to ask. Lungi?
Hi, can you hear me?
Yes, sir.
Hello. All right. Sort of been struggling. Okay. My question is, if there was a source document for the transaction of capital, saying that the amount was paid directly, it was a direct deposit, or it was a direct payment into the bank account.
Come again, you are saying direct deposit?
No. I'm saying, I'm looking at the transaction. This was a direct payment into the bank account.
Can you post your question on the chat? We are struggling to hear you.
I'll do that. Thank you.
Thank you. May I kindly mute the mic so that he can continue? Then after transaction 4, then we can take 5 questions again. And if you might forget, you can just post it on the chat. Mr. Mkokone, you can continue.
Let's move to, now I'm on transaction on the dated Feb 3. They are saying purchased merchandise from Glasgow Ltd and paid by an EFT directly into the business bank account of Glasgow Ltd 888855. Here the business purchased from Glasgow Ltd and they paid by cash. That's why this transaction will be recorded under cash payments journals, because we paid cash to Glasgow Ltd for trading for merchandise purchased. This will affect our cash payments journals because we said under cash payments journals we record all cash paid out by the entity. Here the entity paid out 8855. If we go to the solution, transaction 3, if you go to cash payments journals under date, the transaction took place on the 3rd, we put 3rd. Then under the details, we put the Glasgow Ltd because we paid Glasgow Ltd. We paid Glasgow Ltd. Then under the bank, we put the full amount, including VAT, under the bank account. We put 8855 because remember we purchased trading inventory. That one will affect our purchases account. And our purchases account, we record amount under purchases columns. We record amount excluding of VAT. That's why we said 8855 times 15 divided by 115. That will give you a VAT input of 1155. And the difference between VAT input and VAT input of 115 and the bank amount of 8855 will give you the purchases amount of 7,700. Remember, under bank column, we record all amount including of VAT, and under purchases account, we record amount excluding of VAT. That's the difference. Purchases column amount excluding VAT, bank column, which is the main bank account of the business, we record all amount excluding VAT. Let's go back. Still on transaction Feb 3, they are saying they purchased merchandise on credit from Fikizan Limited, 9,200. Here the business purchased on credit. They purchased trading inventory on credit from Fikisen Limited, 9,200. And I said, purchases of inventory by the entity on credit must be recorded under purchases journals. Purchases of trading inventory or merchandise by the entity on credit must be recorded under purchases journals. This transaction, if we go to the solution, if we go to purchases journal, let me go. You see on the 3rd, this is the date the transaction took place, and we have details. We put the name of the client, the name of our client, which is the name of our supplier, which is Fikisen. You must correct there. It must be Fikisen Ltd, not PBK. You must correct. And we put the full amount of 9,200 under trade payables. Remember, under trade payables column, you put the full amount, including VAT. Then you show the VAT separately under the VAT input column, where you set 9,200 times 15 divided by 115. It will give you VAT amount of 1,200. And the difference between 9,200 and 1,200, it will be the purchases amount of 8,000. Still on the 3rd, they are saying we sold trading inventory on credit to J. Jensen for 13,800. And I said previously, when the business sold trading inventory on credit, they must record it under sales journals. Under sales journals, we record all trading inventory or merchandise sold on credit. Under sales journal, we record all trading inventory or merchandise sold on credit. Now we go to purchases journal. So we go to sales journals because here we go to sales journal because here we sold trading inventory on credit. And I said in the sales journals, we record all trading inventory sold on credit by the entity. That's why this transaction will be recorded under sales journal. Then we go to sales journals. Then the date will be on the 3rd. The transaction took place on the 3rd. And the date we put the 3rd. The details. This comes from J. Jensen. Under the details we put the name of the data, which is J. Jensen. Under trade receivable columns, we put the full amount of 13,800. Under trade receivable column, we put the full amount including VAT of 13,800. Then because we sold, then it will be part of VAT output. Then you say 13,800 times 15 divided by 118. It will give you 1,800. And the difference will be recorded under sales, which is the amount of 12,000. Can I take questions before we move to the next transaction?
Yes, can I just go before I open the mics? I've got a few questions from the chat. One student was asking why was there VAT on the capital? So there's no VAT on the capital. So I've shared on the chat what was the answer. Then the other one is asking about the folio numbers. It's saying, should we just do, what according to our preferences? Can you respond to that?
Yeah, for now, they must not worry about the folio column. They must just leave it for now. For the next assessment, they must leave the folio column out.
Okay, I'm opening the mics now. And also just the calculation of VAT. Can you go to that screen just to show them the formulas? Because the student is saying, why is the VAT output the 118?
Yeah, remember on the transactions, they said the business is registered for VAT, it's a VAT vendor. And I said, when you see let me go to this one. They are saying the following information relates to Sunshine Class Traders, who is a registered as a VAT vendor. And I said, if you see the business is registered as a VAT vendor, I said all the transactions must be inclusive of VAT. That means all the transactions are inclusive of VAT. That's why we used 15 divided by 115 because of the business is registered as a VAT vendor. Let me go back. This is the one where I'm saying if the amount include VAT, to calculate VAT amount, you will take that amount include VAT times 15 divided by 115. And if the amount exclude VAT, you will take to calculate VAT amount, you will take the amount excluding VAT times 15 divided by 100. Remember the total cost, as Mr. Maraisani said, is 100%. Then when you add VAT of 15%, it will be total cost excluding VAT equals to 100 plus VAT of 15% equals to 115, which is amount including VAT. That's why we used 115, because here they are saying the amount including VAT. Are you answered?
Thank you. I think it was Kialeboha, I think. Tato, is that an old? Kialeboha, you answered or?
No,
Yes.
it was someone else, ma'am, who was asking about the why is it 118? Why is it the VAT times 15 divided by 118? What?
It's
what makes that
115.
115? Oh,
not
sorry.
118. Because it's 100 is total amount excluding VAT, which is 100 plus VAT. 15% equals to amount including VAT equals to 115. That's why we divide by 115 because
the calculation you said
amount in the transaction, all amount in the transaction including VAT. That's why we used 115.
Oh, I must
Because
have
if you come here, the business registered as a VAT vendor, and I said all the transactions will be inclusive of VAT. That's why we used 115.
Oh, okay. No, thank you so much, sir. I must have been confused with 118.
Oh no, it's 115. It's not 118.
Thank you. Apologies.
Oh, thank you. No problem.
No problem. We are here to help you. There's Tato. I don't know if that is an old hand. If it is, can you lower your hand? An unknown user. I don't know. Whose number? Okay. While we're waiting, Vincent, you can quickly ask your question. Okay, while we wait for Vincent, Matabang. Okay, it's gone. Mo. Okay, Jessica.
Thank you, Ms. Clara. So just to backtrack slightly, we spoke, one of the students raised the issue of VAT on capital, but also loans. And I just needed clarity there. So my understanding, and maybe I'm just interpreted incorrectly. When you take out a loan, let's use a car loan as an example. When you get your tax invoice, the amount of the purchase to do the loan contract. On the contract, you'll have the devetted amount. Let's say the purchase value is 200,000, for example. If you do devet, if you get your invoice, because your invoice will be sort of a copy and paste to the bank contract that you'll get for this purchase of this vehicle, they will show the devetted amount, then the VAT, then the final capital. So when you say VAT is not added to capital, just explain to me. I lost you completely there.
So I don't know. Remember on this question, the capital refers to the amount that the owner has injected into the company. So it's not the same as when you purchase something on credit.
Okay, so when we
there's a
speak of
difference
loans, we
between the
speak
two.
of loans from directors, for example.
Yes. So
Okay, got you.
so
Sorry, that's why I was confused there.
Yeah.
Okay, got you. Thank you.
Okay.
Thanks, Ms. Clara.
You're welcome. You're welcome. Can we take? I will take two more people and more. Are you back? Tato?
Yes.
Okay,
Sorry.
more. Yes, more.
So sorry, ma'am. I just wanted to let you know that most of my questions were answered, but then I wanna ask one more question, which is, the tables for the cash journals, are they standard tables? Like we use that throughout. Whatever that we see on the table, especially the headings, is what we use throughout.
Let me go. You mean the cash payments and cash receipts?
Yes.
Can
Isn't
I
that the case?
respond to that?
Yeah,
That
you
is
can
Joseph.
respond to Mr. Maraisan, yes.
What we normally say when we are teaching cash receipts, cash payments, we are always saying, there is lightning here. We are always saying the columns are dependent on the company, on the business. So it doesn't matter. It can be 20, 50 columns. So to respond to your question, the columns can be many, but standard for now, for our module, I mean, we choose. I think, Bra Joseph, is that making sense?
Yes, Mr. Maraisan.
It makes sense or not?
Sometimes, if you look at the cash receipts journals, sometimes under the columns, maybe we can add maybe rent income.
You can add so many columns.
Yeah.
Depending on what your incomes and expenses are.
Oh, okay. Now I see, because here it's bank and sales. Oh.
Yes. Bra Joseph, I see people are angry here.
Why?
Sorry,
No, reality
More, are you answered?
Yes, sorry to interrupt you.
Okay.
You said we can add as many, and also it's dependent on the expenses and the incomes. So my question is, the sundry part, since the ones on the sundry accounts are mostly the ones that are based on the basic accounting equation. Yes, so they remain for as long as we put the elements of the basic accounting equation on the sundry accounts. The sundry accounts will remain that as like the amount and the detail.
The sundry account accommodates all outstanding accounts.
Oh, okay.
That is
if there is no column you can put maybe like this column for cash receipts journals. There is no column for capital. That's why we put capital under sundry accounts.
But can I edit and avoid the sundry accounts? Can I edit on the thing on the one of the columns of the cash receipts journal and avoid the sundry accounts part? Can I do that?
No, that one. Do you remember? Let me show you required.
Okay.
The required will give you direction. Like this required, they are saying they want bank column, sales, VAT output, trade receivable, VAT input, settlement discount granted, and sundries. You must follow the required when you are doing cash receipts journals. You don't need to add your own column.
Oh, I understand. Thank you so much.
Thank you.
You are
I'm taking the
welcome.
last person so that he can I think I will stop taking questions for now so that he can continue. Then when he's done, we will come back.
Yeah, let's continue. Let's go to transaction number, which is transaction February 4. They said purchase a desk on credit from City Furniture 3565. Here we purchase a desk on credit, and I said purchases of any item except for trading inventory or merchandise will be recorded under general journal. Because remember this, we purchased equipment on credit. That one will form part of our general journal. Because under purchases journals, we record only trading inventory purchased on credit. And this is not a trading inventories, it's a desk, which is equipment. Let me go to general journal and show you. This is the solution here. We show you because we purchased on credit, it will affect our trade payables control account, which is a liability. Then our liabilities increases on the credit side. That's why, because we purchased on credit, our liability will increase. That's why we credited our trade payables control account with the full amount. And we calculated VAT using 15% over 115,3565 times 15 divided by 115. It gives you a VAT input of 465, and the difference will be the amount of furniture of 3,100. And remember the difference between VAT, input VAT and output VAT. Input VAT is VAT paid on the purchases of goods or rendering of services, and will be claimed back from SARS. If you go there to our transaction on the 4th, we purchase a desk on credit, and we said VAT input is paid on the purchase of goods or rendering of services and will be claimed back from SARS. That's why this transaction affect our VAT input, because we purchased, and we said VAT output is VAT collected by the business on behalf of SARS. Then it will be classified as a liability for the business, while VAT input will be classified as an asset to the business. Let's move to transaction FAC6. FAC6, we said purchased receipt books and pens from Pencil and paid by credit card. Here we purchased receipt books and pencil from Pencil and paid by credit card. That one will also affect our general journal, because remember, pens is part of stationery, and stationery is not part of our trading inventory. Let go there. The following relates to science who is registered for the receipts, books, and pens from Pencil and paid by credit card. Here we paid by credit card. That means we owe. then it will be part of liability. And it will affect our general journal. Because we paid by credit card, we still owe. That amount of 208 will form part of our liability. It's not a cash transaction. That's why this transaction is not affecting our cash payments journals. If we go to our general journal, here you see they credited our trade payables control account or bank credit card by the full amount of 230 rand, and we calculated VAT input because we said VAT input paid on the purchases of goods or rendering of services. Here we purchased stationery, that's why we call it VAT input. And we said 230 times 15 divided 115, then it gives us VAT input of 30 rand. And the difference will be our stationery amount of 200. Let's move to the next transaction. Transaction 6, we continue with transaction 6. They say the business draw cash to pay week's wages of 954. Here we paid. They say movement of cash payment. Cash paid out of the business. They say movement of cash payment. They say movement of cash payment. That's why this transaction will affect our cash payments journal. Because we said under cash payment journals, we record all cash paid out by the business. Here we paid our employees the wages, week's salary. The wages weeks, yeah, maybe. Here we paid our employees the wages weeks. That's why we said this transaction will be recorded under cash payments journal, because I said under cash payments journals, we record all cash paid out by the business. Let's go to cash payments journal to see transaction number 6. Is transaction number 6, ne? I want to confirm. Yes, it's transaction number 6. Yes, transaction number is 954. I'm confused now. Yeah, it's transaction number 6954. There is an error here on our suggested solutions because they put it under date that took place on the 3rd, which is wrong. Under the date, we must put the 6th. And because we paid by cash, under details, we put cash. And under bank column, we put the full amount of 954. And there's a wages column. Under wages column, we put 954. Remember, wages is not vetable. It's part of pay as you earn. If you go to it's page 34. If you refer to page 34 of Study Unit 5, you will see what I'm talking about. You must correct the date will be 8. The date will be 6. Sorry, you must correct under cash payment journals and put date 6. Let's move to the next transaction on the 8th of Feb. Here we are saying we made an EFT to Glasgow Ltd, paid their account 3900. Made an EFT. The business made an EFT. Sunshine Glass Traders made an EFT to Glasgow Ltd, paid their account of 3990. Here the business paid the amount of 3990 to Glasgow Ltd. Here there was a movement of cash from the business bank account. That's why we record this transaction under cash payments journals, because we said under cash payments journals, we record all the cash paid out by the business. Here the business paid Glasgow Ltd 3990. If we go to cash payments journal on the 8th, you see date the transaction took place. We put the 8, the details. We record the name of the person whom we paid. We paid Glasgow Ltd. We put the name of the business whom the business paid is Glasgow Ltd. And under the bank column, I said under the bank column, we put the full amount inclusive of VAT. That's why we put 3990. Then let me go back. And if I go back, they are saying the business received a discount from Glasgow Ltd for 230. It means the business was owing, before the discount, the business was owing 3990 plus 208, which is the business was owing Glasgow Limited 3990 plus 420. 3990 plus 230. The business was owing Glasgow Ltd 4,220, and they received a discount from Glasgow Ltd, which was it was settlement discount received from the supplier, which is Glasgow Ltd. If you go to the transaction on the 8th, under cash payments journal, under the column of trade payables, we record the full amount, the amount we owe to a supplier, a creditor, which is J. Jensen, which is 3990 plus 230. Then it will give you the total amount owing to Glasgow Ltd. Sorry, from owing to Glasgow Ltd, which is 4220. And we received a settlement. We received a settlement discount receipt of 208. And the settlement discount received include VAT of 15%. And we said 230 times 15 divided by 115 equals to VAT output of 30 rand. And we put the difference between VAT output and 230, 200 to the settlement discount received. Ms. Msiza? Clara? Hello? Clara? Mr. Maraisani? Hello? Maraisani?
Morning, sir.
Can we take questions? Let's take few.
I don't know.
Let's take few questions.
Okay.
Any questions?
Where is Clara?
I don't know. I see the hand from, can you unmute Lizelle? Is Lizelle? Because on my side, I can't unmute them.
I don't know, because she's the one who is muting and muting. So I don't know.
Sorry, I'm back. There's a heavy storm here. So I need to unmute. The storm is bad, guys.
Yeah, we want to take questions?
Yes, I'm unmuted. Yeah, in Gauteng, Pretoria, we have a very bad storm today, so bear with me. Had to check up if the roof and the windows are not broken. So that I think is an old hands. Vincent. Okay, Noah.
Evening.
Good evening, Noah.
Evening.
Evening.
Mr. Mukokoni and Miss Clara. As a first-time student doing accounting, I am lost. I am in the dark. I don't understand what is happening. So I was thinking, these slides that I'm seeing that you have been presenting, is it possible that you can post to us prior to the class? And also, when you were doing that, the table that you were showing on the slides, isn't it possible that you studied afresh with us so we can follow which information goes where? Like, honestly, I'm in the dark. I don't understand what is happening. Thank you.
Which table are you referring to?
The one where you were showing the first column is the date and the amount, the transactions, the VAT, the input, and the output VAT.
You mean this one?
You
mean these columns?
Yes, yes, this one.
I remember I said under the date, we record the date the transaction took place under the date column. You see this column, and under the details column, we record the name of the person or business from whom the cash was received if we are doing cash receipt journal.
Yes.
If we received cash from S-Shine like this one, that's why we record the name of the person or the business from whom the cash was received. Then under the bank column, I said we record the total cash received during the day by the entity. Under bank column, we record the total cash received, including VAT, received by the entity during the day, because this is a daily transaction, like Feb 1 is. Then under sales, I said, under sales column, I said we record amount excluding of VAT. Then under VAT output is where we calculated VAT and we record the amount of VAT. Then under trade receivable, which is our data, we record the total amount owed by our debtors under trade receivable columns. Then under settlement discount granted column, we record the amount excluding VAT. That's why you see 300, and under VAT input column, we record the VAT amount. And if there is any, maybe let's say there is capital. If you look, there is no capital column. That's why we put the amount under sundry accounts. If the transaction have no column, we record the details of the transaction under sundry accounts. Are you?
Mr. No, are you answered?
I am not.
Please go through it again for her, please, so that she can just maybe make notes, please. And for all of us.
Go through them again. I will explain the columns. I said under the date column, we record the date a transaction took place.
Yes.
And remember, those transactions took place, we record transaction that took place daily. Like date is one, the transaction took place on the 1st of February. That's why we put one under the date. Then under the details column, we record the name of the person or the business from whom the cash was received. Here, like transaction on the 1st of Feb, the business received the cash from S-Shine. That's why we put the name of the person.
Yes.
And under the bank column, we record the total cash received during the day. And this bank column must be inclusive of VAT. The amount in the bank column must include VAT. Under bank column, we record amount including VAT. We record total cash receipt during the day. Then under sales, if there is any cash sales, we record it under sales. But this sales column must be amount excluding VAT. Under sales column, we record amount excluding VAT. Then here, there is a VAT output column where we record the VAT output. And the next one is trade receivables column, which is a data, people who owed us. Then under this column, we record the full amount owed by our debtors, including discount. Then under settlement discount granted column, we record the amount excluding VAT input. Then under VAT input column, we record the VAT amount. Then if, for example, there is capital amount, if there is no if the transaction, if there is no account like capital, there is no column for capital, then we record the amount under sundry accounts.
Okay.
Yeah.
Is
And
there
the other
any
thing
question?
to add on Mr. Mkhokone, so I'm not sure if you're also confused. Remember, when coming to settlement discount and the VAT output, why is it in the bracket? Okay, I will mute everyone. Why is in the bracket? Remember, it's a reversal. We had already charged a VAT and before we removed the settlement discount. So the 300 and the 45 were already in the sale. But however, when you grant someone the discount, you are reducing your sale, and means then you need to also reverse the VAT that you had initially recorded because you didn't collect that. As you remember, VAT is you are taking it, receiving it on behalf of the government, is not for your business. So if you didn't gain, you didn't sell anything, you can't be having VAT, charging people VAT. If you reverse, then it means the VAT that you had charged is not paid to you, therefore you need to reverse. So we are reducing our VAT. That's why it's bracket 45 in brackets. Am I clear? Okay, so just remember that always make it simple. Let's not overcomplicate things. So the slides were made out of the study guide. So the information that is on this is just the themes, the summary. So I would really, really recommend you now to go back to the study unit from page by page, because most of these things have already been discussed. We are just summarizing them here for you guys for the class. But however, you still have more examples under the study guide. And also remember, we are living in a digital era where you can also go to YouTube to get some basics as well at your own time. Because now we have an opportunity on YouTube that we have, many videos explaining the same thing in a different way, so you can make use of that. And I remember also some students on Saturday have shared some of the interesting videos on YouTube to say, you know what, I've done this, I went to this person, to this site, and it made my life easy. That's why I'm comfortable with accounting. So let's make use of all the resources that we have in our disposal to equip ourselves. Yes, we are available to assist you, but we also need you to also make some bit of an effort so that we can meet each other halfway. Thank you. So can we, Mr. Mkhokone, can you finish? Then we can take questions if we still have. Thank you.
Yeah, let's move to the next transaction, which is on the 10th of Feb, where the business sells merchandise. for 3,910. Here is cash sales. Our entity received cash from sales of merchandise. This one will form part of our cash receipts journals, because under cash receipts journal, we said we record all cash coming into the business. This is one of the cash coming into the business because it's cash sales. Let's go to our cash receipts journals. Under date column, the transaction took place on the 10th. Then we put 10 under the date columns. Under the details column is where we record the name of the person or the business from whom the cash was received. Here they are saying it's a cash sales. Then we put details as cash. Then under our bank column, we record the full amount, including VAT, which is 3,910. Then we calculated VAT, which is the VAT output, because we said VAT output is VAT collected on behalf of SARS by the entity. Because we said output VAT is the VAT levied by the entity on the sales of goods or services rendered by the entity. Yeah, the entity makes a cash sales. That's why it's affecting our VAT output. Then we said the total amount of 3,910 times 15 divided by 115. Then our VAT output is 510. As I said, under sales column, we record amount excluding VAT. Then the difference between 3,910 and the VAT amount of 510, it will give you 3,400, which will be recorded under sales column. As I said, under sales column, we record amount excluding VAT. Let's move to the next transaction. Transaction on the Feb 12. We issued a credit note to J. Jensen for an overcharge on the 3rd of Feb for 115. If we go to the 3rd of Feb, here on the 3rd, we sold trading inventory to J. Jensen for 13,800 on the 3rd of Feb. And here on the Feb 12, they are saying we issued a credit note because we overcharge our data, J. Jensen, by 115 rand. Because remember, when we are saying credit note, what can I say on credit note? I will say credit note occurs when the seller, in our case, Sunshine Class Traders, is satisfied with the goods received from the data, which is J. Jensen. And the seller, in our case, Sunshine Class Traders, sent the buyer, which is J. Jensen, a credit note. And the business will record the goods returned, because this is the goods returned by the buyer, which is Mr. J. Jensen. The business will record the goods returned in the purchases returns journal. Hello, are you still here? Hello? Hello?
Yes, sir.
Yes, we're still here.
Let me maybe
Yes,
repeat
sir.
the credit note so that they can understand. I'm saying credit note occurs when the seller, in our case, Sunshine Class Traders, is satisfied with the goods received back from the buyer. J. Jensen. And the seller, in our case, Sunshine Class Traders, sent the buyer, which is J. Jensen, a credit note. Then the seller, which is our business here, Sunshine Class Traders, record a credit note in the sales returns journal. If you go to the sales returns journal, you see we record date is J. Jensen here. There was typing error. They put it in Afrikaans instead of we put it in English. It will be details. And I said under details we record the name of the person or persons from whom the cash was received or paid. Here we put the name of our supplier, which is J. Jensen. And under trade receivable columns, we put the full amount, including VAT. Then under VAT, then we calculated VAT output by saying 115 times 15 divided by 115, which will give us 15 rand, and the difference will be recorded under sales returns journal. To understand this transaction better, you must refer to transaction on the 3rd of Feb, which says sold trading inventory on credit to J. Jensen on the 3rd. And on the 12th, J. Jensen was not happy with the goods delivered for him. Maybe there was a faulty, but here we overcharge him. Instead of charging him the difference between 13,800 and 115, we charge him more by 115. That's why we put the amount under sales returns journal. Then the next transaction is cash to pay the week's wages of 950. Here there is a movement of cash. The business paid week's wages of 940. That one will affect our cash payments journals, because we said under cash payments journals, we record all cash paid out by the business. Here, if you go to transaction on the 12th, you'll see date is 12. Under details, we put cash. We put the full amount under bank. And there's a wages column. We put 940 under wages column. Let's move to transaction on the 15th. Here there is cash sales of 2415. Here we received cash, and I said cash received will be recorded under cash receipts journal. This transaction will be recorded under cash receipts journal. If we go to the 15 under cash receipts journal, is the date, we put 15, details where the amount comes from. The amount under details, we record the name of the person or business from whom the cash was received. Here they said cash sales. Then we put cash under details. Then we put the full amount under bank column, because I said under bank column, we put amount including VAT. We recorded amount including VAT. That's why we put the full amount of 2415 under bank account. Then because this is a cash sales, we calculated VAT output, because I said VAT output is levied by the entity on the sales of goods or service rendered. That's why we calculated VAT as VAT output. We took our amount, which is 2415 times 15%. divide by 115, then you'll get your VAT output of 315. Then I said under the sales column, we record amount excluding VAT. The difference between 2415 and the VAT output of 315 will be recorded under sales column. Let's move to, this is transaction on the 15th. They said J. Jensen paid money directly into the business bank account. And they are saying the transaction 15 continue. They are saying settlement discount granted to J. Jensen 345. Here, J. Jensen was owing the business. The total amount was owing. It was 5985 plus 345. The total amount owed by J. Jensen was 6,308, including settlement discount granted. This amount will affect our cash receipts journal because they are saying J. Jensen paid money directly into the bank account of the business. The business, our entity, which is Sunshine Class Traders, received amount of 6,330, including settlement discount from trade payables. This one, because it's a cash received or cash coming into the business, this transaction will be recorded under cash receipts journal. Let's go to transaction on the 15th. On the 15th, you see there is J. Jensen. Then under trade receivable columns, we record the total amount owed by our data, which is J. Jensen. That's why we record 608, which is 5985 plus the discount of 345. Then it gives you 6,308. And the different, and remember we received settlement discount granted of 340. And remember, settlement discount granted including, it's inclusive of VAT. That's why we said 345 times 15% divided by 115, then it gives us VAT of how much? 345 times 15 divided by 115, it gives us VAT input of 45. And I said the settlement discount granted column will be excluding of VAT. That's why we said 345 minus 45, and we put the total, we put the 300 excluding VAT in the settlement discount granted column. And under bank column, we record amount excluding settlement discount granted. Because remember, the business did not receive 345. That's why we, under the bank column, we record amount excluding 345 settlement discount granted. Let's move to the next transaction. Transaction on the 18th, they are saying sold goods on credit to F. Brown, 4,600. And I said in the sales journals, we record all trading inventory or goods or merchandise sold on credit by the entity. Here we sold goods on credit to F. Brown. This one will affect we sold goods on credit. This one will affect our our sales journal. Let's go to sales journal on the 18th. Let's go to sales journal. Here is our sales journal. The transaction dated 18. Our details is Mr. F. Brown. Under trade receivable column, we record the total amount, which is 4,600. And then we calculated VAT on the 4,600, which is 4,600 times 15 divided by 115. Our VAT output will be 600. And the difference between the VAT output column and the trade receivable columns will be the sales column, which is the sales amount exclude VAT output of 600, which is 4,000. There is cash purchases of trading inventory. Here there is a movement of cash. The entity purchases trading inventory. Because I said in the cash payments journal, we record all cash paid out of the business. Here the business purchased, the money goes out of the business, and this transaction will be recorded under cash payments journal. If we go to cash payments journal on the 18th, under details, because it was cash purchases, under details we put cash. Then under the bank, we put the full amount, including VAT of 2,760. Then we calculated our VAT input. Because I said VAT input is VAT levied on the goods or services rendered by the entity, or VAT paid on the purchases of goods or services rendered by the entity. Here we say 2,760 times 15% divided by 115 times 15 divided by 115, which is 360, which will be the VAT input. Then the difference between our VAT input column and our bank column will be our purchases column, which is 2,400. Here we purchase glassware on credit from Glasgow Ltd, 5750. This one, glassware, is part of our inventory. That's why this transaction, because we purchased on credit and we said under purchases journal, we record all trading inventory purchased by the entity on credit. This one will form part of our purchases journal. If we go to purchases journal, where is the purchases journal? If we go to purchases journal, you will see under the 18, dated is 18. And under details, we put the name, which is Glasgow Ltd, the name of our supplier. And under trade payables, we put the full amount, 5750, and we must calculate VAT input on the 5750, which is 5750 times 15 divided by 115, and our VAT input is 750. Then under purchases column, we record amount excluding VAT, which is 5750 minus 700 VAT input. Then that 5,000 is the amount excluding VAT. Under purchases column, we record amount excluding VAT of 5,000. On transaction Feb 20, returned damaged goods to Glasgow Ltd 575. Here our business or entity returned damaged goods to the supplier. That's why this one is recorded under Purchases Returns Journal. Because we said under Purchases Returns Journal, the business record all trading inventory returned to the supplier. Here we return damaged goods to the supplier. If we go to Purchases Returns Journal, here on the dated 20, details is Glasgow Ltd. Under trade payables, we put the full amount, including VAT of 575. Then we calculated VAT input. 575 times 15 divided by 115. It will give you VAT input of 75. Then the difference between VAT input and trade payables column will be recorded under purchases returns. Under purchases returns column, we record amount excluding VAT. Let's move to the next transaction. The next one is Feb 21. Here, draw cash to pay wages. As I told you earlier, on this transaction, there is a movement of cash. Cash paid to our employees. We paid wages to our employees. This one is cash coming out of the business. Then this transaction will be recorded under cash payments journal. If we go to the cash payments journal, if we go to date is 21, under details we put cash. Then under bank, we put the full amount of 989. And under wages column, because there is no VAT on wages, under wages we put 989 under wages column. Then still on the February 21, we received damaged goods returned by F. Brown and issued a credit note. Here we received damaged goods. Here we sold to Mr. F. Brown, and Mr. F. Brown is not happy with the goods received from us. Then Mr. F. Brown returned goods to us. Because if you go to transaction on February 18, it said sold goods on credit to F. Brown, 4,600. Then on the 21st of February, Mr. Brown returned damaged goods and we issued him a credit note amounting to 230. This one will be recorded under sales returns journal. Remember, when we sold goods to F. Brown on the 18th of Feb, we recorded transaction under sales journals. Now, Mr. F. Brown returned goods to the business, returned those damaged goods to the business. Now we record the transaction under sales returns journal. Let's go to sales returns journal. You see on the 21st date, under here you must correct and you put details is Mr. F. Brown. And the total amount was recorded under trade receivable column amounted to 230. And you say 230 times 15 divided by 115. Then it will give you VAT output of 30 rand, and the difference between VAT output of 30 rand and trade receivable of 230, it will give you the sales return of 200. Under sales return, we record amount excluding VAT. Let's move. A transaction on the 25 is our cash sales. Here there is movement of cash. The business, our entity, Sunshine Glass Traders, received cash sales of 6210, And I said under cash receipts journals, we record all cash coming into the business. This transaction will affect our cash receipts journal. If we go to cash receipts journal transaction on the 25, dated 25 under details, we record the name of the person or business from whom the cash was received. Here we put, because they said cash sales, here we put cash under details. Then under bank column, we put the full amount, including VAT. Then under bank column, we put 6,210, because here we sold. Here we sold. It will be our VAT output, because VAT output is the VAT levied by the entity on the sale of goods or services rendered. Here is the cash sales of goods. That's why it will affect our VAT output. Then we said 6,210 times 15 divided by 115. Our VAT output will be 810. And I said under sales column, we record amount excluding VAT. Then the difference between 6,210 and the VAT output of 810 will be recorded under our sales column, which is 5,400. Then February 25, here we received an EFT from F Brown 2550. And a settlement discount granted to him was 208. Remember F Brown, if we go back, I don't remember whether it's transaction, let me go back. Is transaction number February 18, where we sold goods on credit to F Brown, 4,600. And now we received amount from F Brown, 2550, after we gave him settlement discount of 208. This one will affect our cash receipts journal. Remember, when we received cash, this amount of 2550 from Jason on the 15th. Sorry, on the 25. There is no VAT. There was no VAT accounted on the date of sale. There was no VAT accounted when we received 2550. The VAT was accounted on the settlement. The VAT was accounted when we granted Mr. F. Brown a settlement. If you go to our cash receipts journal, on the 25, we put the name, we put 25 is our date. Then we put the name of the person whom we received cash. We received cash from F. Brown of 2, and under the bank column, we received how much? We received 2,550. And the total amount owed by Mr. F. Brown was 2,550 plus 2,8, which is 2,078. Under trade receivable columns, we record total amount owed by our customer, which is Mr. F. Brown, before we granted him settlement discount of 2,780. Then we granted him settlement discount of 230. If you say 230 times 15 divided by 115, it will give you VAT input of 30 rand. And the difference between settlement discount granted of 230 and the VAT input of 30 rand will be recorded under settlement discount granted as 200 Rand. The next one is Feb 26, where we draw cash to pay wages. Here is cash coming out of the business because the business paid their employees wages. This one will affect our cash payments journal. Let's go to cash payments journal on the 26th. Then under details, we put cash. Then under bank, we put the full amount of 945. Also under wages column, we put the full amount of 945 because there is no VAT on wages. The next one, still on February 26, we made an EFT to Telkom to pay telephone account. Here the business paid telephone account by EFT. This transaction will also affect our cash payments journal because cash is coming out of the business. If we go to cash payments journal, still on 26, then under details, we record Telkom. Under bank, we record the full amount, including VAT of 575. Then we calculated our VAT input, which is 575 times 15 divided by 115. Then it will give you 75 Rand, which is VAT input. And because there is no column for telephone expense, then we record the amount in the sundry accounts, and under sundry accounts, under amount, we record the amount excluding VAT, which is 575 minus VAT input of 75 Rand. The 500 will be recorded under amount, and under details, we record telephone expenses. Let's move to the next transaction. The next transaction still on Feb 26. They are saying we received an account from Printo Limited for printing of documents 805. Here we received an account. That means we bought on credit and we purchased printing of documents. This transaction will affect our purchases journals, because we said under purchases journals, we record purchases of any items, excluding purchase of trading inventory or merchandise. If we go to our general journal, this one will form part of our general journal. Here we credited our liability because we bought on credit. That's why we received an account from Printo Limited. The entity here received an account from Printo Limited. That means we have not yet paid them. That's why you see we credited our trade payables control account with 805, and we debited our VAT input, which is 805 times 15 divided by 115 by 100 by 105. And the difference between trade payables, the amount we owe, and the VAT input will be 700, which will be our printing amount. Then the next transaction was on the Feb 27. Here we purchased inventory on credit from Glasgow Ltd, and we said the business or the entity record all trading inventory purchased on credit under purchases journal. This transaction will be recorded under purchases journal because it's purchased of trading inventory on credit. If we go to our purchases journal on the 27th, this is our date the transaction took place. the details will be our liability, will be our creditor, which is Glasgow Ltd. Then under trade payables, we put the full amount of 3,450, the amount we are owing. Then under VAT input, it will be 3,450 times 15 divided by 115. Our VAT input will be, let's see, purchase inventory on credit. 3,450 times 15 divided by 115. It will be 450. Yeah, it was an error here. You must correct. The VAT input is not 420. It's 450, because if you take 3,450 times 15 divided by 115, it will give you 450. You must correct the VAT input. Then the difference will be 3,000, which will be recorded under purchases column. And the purchases column must exclude VAT. Remember to correct the VAT input and put 450 instead of 420. Still on 20, now we are on still on 27. They are saying made an EFT to FAC1502 Ltd and received 299 discount. And after discount, the amount owing by our business will be 5,476. Here we paid our creditor, our trade payables, Mr. FAC1502 Ltd, 5,476 after they granted us discount, after we received discount of 299. This one will affect our cash payments journal because it's movement of cash, because we paid. That means cash coming out of the business. That's why we record this transaction under cash payments journal. If we go to 27, here is dated 27. Under details, we put the name, which is FAC1502 Ltd. And under trade payables, we record the total amount. We record amount before settlement discount received. It will be amount of 5,746. It will be 5,476 plus 299. 5,774 will be recorded under trade payables. 5,775. Let me confirm, is 5,476 plus 299. Yeah, the amount is correct, is 5,775. The total amount before settlement discount was 5,775. The total amount was recorded under trade payables column. And we received a discount of 299. That discount received was inclusive of VAT. Then we said 290 times 15 divided by 115. Then we said 299 times 15 divided by 115. Then our VAT output will be 39 rand. And our settlement discount received will be the difference between 299 minus 39 of VAT input, which is amounted to 260. And the total amount received, the amount we received is 5,476, which will be recorded under bank column. Feb 28, we made an EFT to HP Bank to pay the owner's house installment of 2,500. Here we made EFT payment to pay the owner's house installment. This one will form part of our drawings because we said drawings occurs when the owner takes things from the business for its own use, for private use. Here we use the business money to pay for the house installment of the owner. This one will also affect our cash payments journal. If you go to cash payments journal on 28, under details, we put HP Bank. The amount under bank is 2,500. Then there is no account, there is no column for drawings. Then we went straight to sundry accounts. Under amount, we put 2,500. Then under details, we put drawings because there is no VAT on drawings. The last one, ZZS made a direct payment into the bank account of the business to pay his rent, 920. This one, the business received direct payment from ZZS. This one, we will record it under cash receipt journals because we said under cash receipt journals, we record all cash coming into the business. Then if you go to cash receipt dated 28 under details, we put the name of the person whom we received cash from. Then under the bank, we put the full amount, including VAT. Then there is VAT output of, because it's rental income, we received rental. Then there is VAT input, VAT output of, we must pay VAT output on the rental income we received. Of 920 times 15 divided by 115. Our VAT output will be 120. Then because there is no rental income column, we put the amount in the sundry account. Then under amount, we put 800 amount excluding VAT. Under details, we put rental income. This is the end of our lesson today. We can now take questions. Clara?
I'm
Mr.
here.
Murray?
I'm here.
We can now take questions.
Yes, let's take questions. It's overtime, so we will be sending invoices, guys. Joking, but thank you for staying until now. Do we have quick burning questions before we leave? Please send those emails to confirm that we worked until this time so that when I'm late tomorrow, I won't get a warning letter. So guys, any burning questions?
Hello?
Okay, we'll start we've got Dimakato. Dimakato here. If Dimakato is not here, Sanele, you can raise your question quickly.
Yes, I was a bit confused there with where is it again? No, wait, what is it now? Issued a credit note. With Feb 8. On
Feb 8.
Yes. Which is receipt per company.
Yeah.
No, sorry, not Feb 8, Feb 6.
Yes.
Yes.
You said purchased receipt books and pens from pencil and paid by credit card. And that falls under general journal.
Yes, because we purchased stationery and our business are not, stationery is not part of our trading inventory. That's why we record, because remember under purchases journals, we record purchased of only trading inventory or merchandise. Here we purchased stationery. That's why it form part of our general journal, because under purchases journals, we record only purchased of trading inventory.
Oh, okay. So
Wait, but doesn't stationery
so
assist the
also
business in trading?
Come again?
Doesn't the stationery
because I
form part
see that.
of the stuff that helps the business trade?
Can we give the lady to finish first, then you'll come after the lady?
Okay, no problem.
Because I see also on the 4th of February, it says purchased a desk on credit. And that also
Yes.
falls under general journal. So does that also mean that it's also part of stationery?
Yeah, because desk is part of equipment. Here we are saying goods, purchase of goods or trading inventory. Here we purchased equipment. That's why it will not form part of our purchases journal, because under purchases journals, we record all trading inventory or goods or merchandise purchased by the entity on credit.
Oh, okay. Yeah, because I wanted to ask also on Feb 3, but you just answered me that purchases
Yeah,
journal
if you go to purchase 3, if you go to Feb 3, here we purchased from Glasgow and paid by EFT. Here there was a movement of cash, and that's why this transaction Feb 3 affects our. Oh, you mean purchase merchandise on credit? Yeah, that one will form part of our purchases journals, because here is clear we purchased merchandise, we purchased trading inventory.
Yes, okay, I'm good. Thank you.
Okay. Can we go to the unknown user? This next time, put your name.
Hello?
The unknown. What's
Yes,
your
can you hear
name?
me?
Yes.
Yes. What is your name?
It's Ferdinand.
Okay, thank you. You can continue.
Thank you, guys. I want to ask if we can go to the transaction on the 12th of Feb.
12th of Feb, yes.
Can you maybe explain the transaction with Jay Johnson again? I didn't completely understand that one.
Remember here, on the 12th, we issued a credit note to Jay Jensen for an overcharge on the 3rd of Feb for 115. If we go to that, on the 3rd, it's 3rd Feb, no? It's February 3rd. Here, remember, on the February 3rd, they said we sold trading inventory on credit to Jay Jensen for 13,800.
Yes.
But the next one on the Feb 12, we realized we overcharged Jay Jensen by 115.
All right.
Because
Excuse me, please interrupt.
Let me finish
It's concerning
explaining.
Can I please interrupt? I just want to add to the question. Is about the same transaction.
Let's finish, please.
Oh, okay, no problem.
Yes, it's the same. Because we on Feb 3, we sold trading inventory on credit to Jay Jensen for 13,800. But on the Feb 12, we realized we overcharged him by 115 rand. Then that's why we issued credit note instead of charging him the difference between 13,800 and 115. Instead of charging him 13,685, we overcharge him by 115. And remember, credit note occurs when there's the seller. In this case, the seller is our entity, which is Sunshine Class Traders, is our seller. We are satisfied because we issued credit note to J. Jensen. That means we are satisfied that we overcharge J. Jensen by 115.
Oh, okay, I understand, sir. And can you also go to the sales return journal? I just want to see again.
For sales returns journal.
Yeah, I just want to see the transaction.
Remember, we sold. Remember, I said under VAT, output VAT is the VAT levied by the entity on the sales of goods or service rendered by the business. That's why it's from part of VAT output.
Okay, thank you, sir. I understand.
Okay, can we check? Yeah, no, guys, can you post your questions so that we can ask you, because we are way over time. Can you post your questions here on the chat and we'll see how we can assist you tomorrow. What do you think, Mr. Mkokon? Because we are over.
Yeah, they can
30
post
minutes.
their questions on
Yes,
on our
on
they
the
Mm.
must send on
chat.
FAC1502@unisa.ac.za on our mailbox FAC1502@unisa.ac.za, or even on the chat. You can post your question there.
Yes, because we are way over time and we have an early meeting also in the morning. So yeah. So, but thank you everyone, and please note plagiarism is prohibited. Assessment is not a group assessment. You have to write this assessment on your own because you'll be employed and expected to perform those tasks alone. So please, we will make sure and we will be on the lookout for plagiarism, and it shall be penalized and punished as it deserves per the policy. And the assessment will be open for 2 hours. So what it means, if you decide that you're going to do the assessment, let's say on the 13th or 15th, allocate 2 hours where you're going to sit down and complete the assessment. You don't open the assessment and go to the bathroom, because the timer, immediately when you say open assessment, it starts counting down your 2 hours. So only start your assessment when you are ready. When you know you are ready and you have everything, you have your pen and paper, your calculator, then you can sit on your computer, then you can start the assessment, because there's no extension on the time. However, you can do it again if you feel you have failed the assessment, or if you are sick, you can do it twice. You only have 2 opportunities to complete assessment 1. So please, I'm repeating, only start the assessment once you are ready, seated, you've got everything in place before you start the assessment. It's like an exam. Go into an exam room. You make sure you've got your water, your pen, your extra pen, your calculator, enough papers to do your calculations. This is not an open book. It's like an exam in the form of an assessment. So we want to test your knowledge on everything that we have taught you from study unit 1 until study unit 5. So all the best, and I don't know if I'm missing anything. And if you haven't submitted or completed admin assessment, you won't be able to view the questions for assessment 1. So if you haven't do it, because I've checked, only 8,900 students have completed out of the 15,880 students that we have. So over, we still have like a lot of students that haven't completed. And please, we will be patient with you, but please make sure you complete it this weekend, before Tuesday to save yourself some stress. And
The hand.
yeah, the
Okay,
hands, the time.
let's give them 10 minutes, like the last 10 minutes to ask, because
Will I get overtime? Sorry, Komodo, quickly, please.
I had a question on February 27, the second transaction regarding, or are you guys just answering general questions?
No, because we already
Let's see if we can help you.
Is Feb when?
27
is the purchased inventory on credit from Glasgow Limited for 3,450, made an AFT to Ferguson Limited and received 299 discount.
I think it's the one with the amount of 5,400 and no, well, it's 5,775. I wanted to know regarding the VAT output, which amount was used to calculate the VAT output?
The amount settlement discount received was used. Settlement was used to calculate VAT. Settlement discount received.
Okay, which amount is it? Is it the 5,775?
It's 299 times 15 divided by 115. Then you will get your VAT amount.
Or 299 times 15 over 150.
Yes, then you'll get your VAT amount of VAT output of 39 rand.
Okay, no problem. Thank you very
much. And the difference between VAT output and 299 will be recorded under your settlement discount received.
Okay, thank you.
Caroline? Okay, Tabiso? Oh, Caroline? Okay, Caroline is gone. Tabiso, are you here?
I will post my question via email, ma'am. It's fine.
Yes, for ease of everyone, you can post it on the chat so that all the students can benefit. Zandile?
Thank you, ma'am. My question is on February 12th transaction.
Yes.
The one where the company issued a credit note of 115 rand. I wanted to add to that guy who asked it so that it will be answered simultaneously, but unfortunately I was not allowed. So now my concern is that this transaction is similar to the one that occurred on February 21st for Mr. Brown, but I don't think the accounting treatment should be the same, because it gives an impression that there were goods that were returned, which is not true. It will end up being a misstatement, and it will affect our inventory account. This is the lecturer who was doing the presentation. In the opening remarks, he mentioned that among other things that are recorded on a general journal is an error. This was an error. There were no goods returned here in this transaction, the one that took place on the 12th of February. The 115 rands was an error. So we were correcting the error. So I was under the impression that it's supposed to be recorded on the general journal as an adjustment, because now it gives an impression that our inventory, there were goods that we received that were returned by the customer. So I don't know if I am the one who's getting this wrong, but I don't think they should be getting the same accounting treatment with that transaction, because the transaction that happened on the 21st for Mr. Brown is clear. It states that the goods were actually returned.
Okay, thank you very much. Then I'll look at it, then I'll post the announcement.
Thank you very much, sir.
No, thank you.
Okay, and next one. Theodora. Jan?
Yes,
you can come.
yes, ma'am. My question is that on the second last transaction of that 5,000 and something of that settlement discount of 299, why was only the 299 used to calculate the VAT and not the full amount of 5,000 and something? because we recorded that full amount in, I think, for bank and for sales. For sales, we recorded 5,770 something, and then a settlement discount 299, and then the VAT is 30 rand or something like that. Why did we calculate the VAT only using the settlement and not using the full amount of 577? Or yes, the 5,077 for sales. Why did we only calculate the VAT for the 299?
Which one is transaction number?
The second last transaction of the
27.
discount. Yeah, 27.
So you want to know why under bank we have 476, and while on trade payables we have 5775.
No, I want to know why was the VAT only for the settlement discount and not for the entire amount of sales?
Remember, trade the purchases, the increase is VAT input, isn't it? So
Yes.
here we were just reversing the recorded VAT input with VAT output. Remember, there's a T account where does the VAT increases on the debit or on the credit. Remember, we've got VAT input and output. Output, we record it on sales, while input on purchases. But instead here, we had already recorded the VAT in our trade payables, in our purchase. So now we were just reversing the previous transaction that we had. That's why removing that settlement discount from our books, because we did not pay that VAT portion on the 299. Remember, we are taking the VAT, we are collecting VAT and paying, we are collecting VAT on behalf of the government, and we are balancing. Remember, when we purchase, it means we are paying someone an amount including VAT, while when we are selling, we are including the VAT in it. So we need to balance the two to say at the end how much is left of VAT that needs to go to SARS.
Okay. Okay. Yeah, that makes sense. Thank you.
You're welcome, Jan.
Okay.
Jan?
Okay, thank you. I wanted to ask if it's possible or legally allowed for a business not to register as a VAT vendor.
There's a prescription, you can voluntarily register for VAT, but however, I think last time it was it 20 million. When you make more than, is it 20 million?
It's
I will
1
have
million. It's 1
1
million
million.
is
So
compulsory
it's 1
registration.
million. It's voluntary.
So I repeat, you were speaking simultaneously. I couldn't hear what you were saying.
So they said 1 million. Do you want to take it, Mr. Mkhokoni?
I'm saying 1 million is compulsory if the business is making taxable suppliers of more than 1 million. Is compulsory for the business or entity to register as a VAT vendor.
Oh, okay. Thank you.
Okay, do we have Karabo? Okay, Zandile. Okay, in the absence of any further questions, thank you everyone. Have a good night and all the best for assessment. I know some students were asking for another class, but we will think about it and see if it's possible or not. But we will keep you all updated under announcements and under this post. All the best with your studies, and let's meet again in the next class. Goodbye.
Thank
you, ma'am, and good night.
Bye.
Bye.
Bye. Good night.
Good night. All the best.
Bye.
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 Second.